If you're still out here struggling with breakout structures, you're marking random highs, and every single time a candle goes through it, even if it doesn't close above it, you think it's a breakout structure, so you enter on the chart and your stop loss gets completely railed, this video is for you. Because entering 2026, if you're not using breakout structure in the right way, your entries are going to be shit. Let's get on the charts. Okay, before we talk about anything, let's make something clear. Breakout structure isn't just when a candle pushes above a high or a low. There's a lot more going into it. So in today's video, I'm going to break down everything from what a breakout structure really means, what makes it valid, how do you actually take trades off of it, and finally, I'm going to show everything on the charts so that you guys can understand in a much easier way. All right, I'm gonna draw this for the definition. It's gonna be much easier for you guys. All right, a breakout structure is when price breaks the most recent high or low depending on the situation, confirming that there's a change in order flow and that the price is going to reverse to the opposite side. So in this case, I drew a bullish trend line. Price closed below this low. This was the most previous low. Price closed below it. If it was a bearish trend line, okay, boom, price closes here above this high, the most recent high. That is a breakout structure. Please note, and it is very, very important, if there is no liquidity sweep before the breakout structure, your breakout structure is most likely going to fail. For price to actually start a whole reversal, because what's the point of trading breakout structures? It's trading reversals, catching the bottom of the market and closing at the highs. Listen, price first needs to sweep liquidity, and then price is going to be able to break a structure to the upside or downside, depending on the trend, obviously, and then you can catch trades off of it. But what actually makes a breakout structure valid? Let me draw some candles. What the fuck? Let me draw some candles. Boom, 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 boom. Let's say we have this here, and we had like this here, like this. Bang, boom, candle here, then big diddy candle right here. Boom, perfect. In this case, it is a breakout structure. First, we need to identify, in this case, let's assume that it's a bearish trend and we want to reverse to the upside. First, we need to identify the most recent high, which is here. For a breakout structure to be valid, it needs to close above the high, above the wick of the high, not above the body, not somewhere, not closing around here. No, it needs to close above the high, above the wick, in a strong manner. If it closes like at the wick or something like this, chances are this breakout structure is going to fail. Same thing with the lows. For a low to happen, let's say this is the wick here, it needs to close below it. It can take like 2-3 candles, but that last candle that breaks the structure should be strong. It should break past it easily. It shouldn't really close anywhere near that place for it to be a breakout structure. Now, how do you actually enter off of breakout structures? Breakout structures is perfect to catch reversals. So let's say you have a bearish trend, okay? So first is to find the liquidity sweep. In this case, the low is here. So for price to sweep liquidity, price does this, boom, sweeps the low here, and then starts reversing and bang. The breakout structure is here. Boom, most recent high. This would be a change of character or CIST, whatever you guys like to call it. But the actual breakout structure is here. When price closed above the previous high. This identifies a change in the trend. So what can you do? Take an entry off of it. On the candle closure, boom, stops below the low, and then you target the other highs. Easy. Now, how do you actually find it in the charts? Very, very easy. Reset chart view. See? This is an example. Breakout structure, where is it? First, we identify, since it's a bearish trend, we want to find the recent highs. Where did we have? We have a high here. Price went above it, but it failed to close, as you can see. So now, this was not a breakout structure, since it didn't close above that high wick. So, the new high is here. What does price do? Price completely rams through it, and breakout structure happens right here on this candle. And as you can see, trend completely reversed, easy fucking trades, boom, crazy, nasty, 1 to 2, 1 to 3 even, very, very easy. Wow, okay. Another example, because it's way too easy to find them. Here, this is perfect. We have a mini bullish trend from Friday till Monday. Since it's a bullish trend, we want to identify the high. We want to sweep above it, and then we want to break below the lows. So for a liquidity sweep to happen, it's the highs. It's going to be that candle here. It happened already, bang. It happened on this candle, so we swept here. For the breakout structure, identify the most recent low. Where's the most recent low? It's here, bang, here. Let me, boom, right here. This is the most recent low. What does price do? Price destroys it. Like literally Drake putting his big fat dick on the charts. Completely destroyed. Closes below it. And it closes below these lows as well. This is a perfect breakout structure. Boom. You can enter off of it. Take a nice trade. Easy. More examples. Sometimes a breakout structure is going to fail. Why? Because you can't just enter as soon as you have a liquidity sweep and a breakout structure. You need confluences that are continuation confluences like fair value gaps and stuff like that. But for now, let me show you an example of when a breakout structure actually fails. Here we have a mini trend. Okay? We have a mini trend to the upside. We want to identify the most recent low to find the breakout structure. Where's the most recent low? Here. What does price do? Price breaks completely past it. Let's say you were to enter here. Boom. You were to put your stops here. You would get fucked. This price would instantly reverse and take you out. It happens. Obviously, there's no 100% winning strategy. But yeah, these are a bunch of examples. Very easy to understand. What I recommend doing is going to on the chart now for like an hour or two and actually start practice identifying them on the charts. Try to find as many breakout structures as you can on the 5 minute, on the 15 minute, on the hourly. I don't care which time frame. It is important to find them. You're going to find them easily, much more easy on the 5 minute and on the 1 minute. But yeah, that's it for breakout structure. I mean, if you have any question, feel free to comment below. But if you enjoyed this video and you found it valuable, make sure to drop a like and subscribe. And I'll see you guys in the next trading video.